Hi, good morning everybody. This is Nicholas Teo from CMC Markets here in Singapore. Today, the 29th of July. Uh, Tonight, we're going to see FOMC come up with their announcements of where their July meeting is concerned. This is as I've mentioned the last couple of days, there are four more at the end of the year, or before now to the end of the year. We have one tonight. We have one in September, which I think most eyes are on with regards to a possible lift-off down there. Another one in late October, and then another one in December itself. But essentially, Mrs. Yellen has said and reminded time and time again that every meeting is a live meeting. For the time being, most people are forecasting for a flat, no change or no move today. But essentially, I mean, this is something that could happen purely because I think the next couple of days we're going to see key numbers like GDP, for example, tomorrow night. And next week we've got the payroll numbers. Those are numbers and indicators that I think the Fed and members of the Fed basically are most hawkish about, or most keeping their eye most about with regards to indicators of maybe impending inflation hitting the US domestic economy. Now, essentially, if there's a rate move besides the dollar and the currencies where the US dollar is concerned in the bond market, we also probably see some influence. We will probably see some influence on stock prices itself. Last night we saw a good rebound from the S&P after 5 so-called days of sell down. Again, just want to point out that this 200-day moving average, this blue line down here, has proven time and time again to be a very strong defensive line for this index. But essentially, what I've mentioned the last couple of days is that we don't like the fact that these highs have been met with equal sell down, and we are, after all, in its more or less 7th year of a bull market. So there could be vulnerable downside. The key thing is to look out for data points to trade around. Besides that, today in Singapore, we saw Singpost come out with their results early this morning. Let me just pull out the charts here. Now, we saw this doji with this long tail down here, and today we're seeing a little bit of a breakout, which suggests that there's a bit of a strength. But essentially, the numbers were quite good. They saw good growth in both top line and bottom line growth, although bottom line has been affected somewhat by a one-off gains because of disposal of some of their property investments. But essentially, what was key, and I think the investors are quite narrowed in about and focused about, is the fact that they have time and time again make bigger inroads into the e-commerce logistics space, something that they have done very well, diversified into very well, especially with their partnership with Alibaba actually paying off quite nicely. Now, from a chart point of view, the stock has actually recovered quite poorly from this slide that we've seen. This is the Fibonacci retracement indicators down here. It is still trying to manage just barely above the 23% retracement level, which is around 190.5, call it. I like to see a firmer bounce out of this level with actually momentum kicking in. But for now, I think it's going to probably languish around these sort of levels. Doesn't look that good. Key results will also be made known after the market closes today from stocks like SGX over down here, and SIA in particular is something that I'm been watching and following and quite keen on. SIA at this juncture looks set for a nice, if I can get the chart up, for a move. This rebound of this low down here, for example, is actually looking very, very sharp and very powerful, purely because this low down here, at least from this, based on this picture, this low established down here is actually above the high down here, which means that this stock has actually got quite some legs to move up. Again from a trend point of view, if I were to draw this line down here, it looks like it's testing this high end of this range. Now, results today, or good results today, could set things off either way, purely because from the standpoint that I mean, we are expecting reasonably good results for SIA, because SIA for this set of results will probably announce and reflect in their numbers a lower oil price, oil price only now, purely because SIA hedges their fuel costs as far as 6 months to a year ahead. As a result of that, we are probably going to see margin gains in their bottom line. Now we will probably get further updates from them after the market shuts today, but key is also the outlook going forward in view of what's happening with the rest of the region, equity markets, etc., etc. But essentially SIA I think is looking reasonably good at this level. Now from a valuation point of view, if I were to just share with everybody based on Morningstar research, excuse me, PE for this company is basically looking not at all stretched. Forward PE of 14.8 times, puts it more or less smack in line with some of the comparables. But don't forget, this is actually quite cheap compared to some of the high-flying Chinese airlines, regional plays, including Cathay Pacific, who are all trading at a much higher level. This big drop of PE from 37 down to 14.8 is reflective of the improvement in forecast earnings going forward. But anyway, a stock for you to for us to perhaps follow. I mean, besides that, it is actually a quiet start to today. Well, we are seeing the initial rebound on the Chinese markets starting to peter out. It's still volatile times, and as we suggested in the notes that we had the last couple of days, just stay away from China for the time being. Besides that, thank you very much. Happy trading.